We are entering the most dangerous trading week of 2026. Last Friday, it was yesterday, we had NFP reports, and it didn't just miss, it imploded. We had negative 92k jobs. And I was already talking about the 58k pricing from 26k. So the market was looking at the negative dollar, and here we have it, negative 92k. The hourly earnings just came out, yes, higher, yes, of course, no doubt with that. But if we look at what we've got here in terms of the labor data, um, where is it? If you look at the unemployment rate, it increased by 4.4%. So what are we looking at? We're also looking at the Middle East being on fire with Iran, Israel, and the US just throwing bombs everywhere. We have oil smashing our 90k, which we predicted on that. Remember what I talked about last week? If you watched the previous video, you see I'm looking out for is the H4 demand to continue higher. That is what we've got for the US. I predicted a jump to about 90k, and here we have it on the weekly chart. We aren't in a dreamlike recovery anymore. Actually, we are in a stagflation war regime, with the US being in a potential stagflation regime. And today I'm giving you the G8 hierarchy for this March 9th to 13th, the specific trading view setups. All right, so let's check out for gold first. Let's just start with gold before we look at Dixie. All right, so here's what we have in gold. What we have in gold is predicted that there's going to be a push a little bit to a D1 demand. I gave these two zones for buys. We have zone 1, we have zone 2, and this zone 2, the market just tapped on it. So we're still expecting a higher high internally on the 4 hour. So this is what I'm looking out for gold, and dollar. The oil is still to the upside, right? But don't you think that oil might get to 150, or probably let's just say 120? So let's just take a look at what oil is doing. Then we will move into currencies. Um, Weekly, what we've seen here is that this is on the weekly, so we might have this issue between Iran, Israel, and the US for, let's say, if we have about 6-7 weeks, we might just be seeing push, and then we're looking at this 120 130 area. That's my view on that. And meanwhile, the Fed is a ship without a captain. Trump's food that's March food nomination of Kevin Wash to the Senate. Actually, Powell is being looked into by the Senate. So the DOJ probe into Powell has frozen the confirmation of Kevin Wash. Think about that. We have a massive labor miss, right? And we have zero leadership at the world's most important central bank. This is why the USD is falling in its safe-haven status, right? We can take a look at what Dixie is and where it is, and it is fascinating where it is on the higher time frame. Look at this on the weekly. Yes, it's telling us okay, it has the potential of pushing up to 103 area, right? But while looking at this, I feel that there was just a liquidity grab on that a 100 area, 90 99 area. Sorry about that. So what I'm looking at is we might see a push down due to this NFP miss before we might see any recovery to the upside. For now, I don't see any reason why dollar should go to the upside, except for the fact that when oil is being it is expensive, we have inflationary pressure on prices because everything is tied to oil, and for that reason we are looking at the biggest guy in the week, which I talked about last week, the card. big boy. So for that reason, if we're looking at card strength and the USD weakness, we're looking at the USD card short. Yes, I expected a better approach to this supply zone, right? But it's stopped here. We grabbed liquidity stopped here. We have our supply at the immediate supply at this point. So market open, I'll look out to short this to this point. But if the market still comes higher to this 1.30 area, I'll still short regardless, because that's what I'm looking out for. In light of card strength, right? I have I have my NZD card. Why? Because NZD, nobody wants to buy the NZD, right? It does not have any energy yield. Then the central bank is actually dovish. It's not hawkish at all. So I'll be looking at this short. I have that supply zone. Yes, this is a demand, of course, but I'm looking at these shorts from here. I'll use a confirmation on that, and still in the light of the card strength. I talked about the euro card last week. You can check out, I talked about this price dropping all the way down, and we have this small pause in the market due to this demand, and now we have a supply, very clean one, and I'm still looking to short. So that is my probability setup for card. Yes, card yen was the best, which yes, it made me some some money last week. Looking at this, yes, I expected this point. It didn't. I looked out for H4 demand. I got in from this point. So I'm expecting a pullback to this demand, and I'll be longing it all the way to like 117 or thereabout. And also remember, we have the Aussie. Yes, Aussie is actually strong, and it also has the high yield. It was the only central bank that was going to hike all through the year. So Aussie JPY is actually the best if we're actually looking at Aussie in terms of Aussie strength. And if we look at this clearly, uh, if we look at this clearly, I talked about this demand last week. Yes, and I'm expecting a push higher, and then I might also join. For the Swiss, I talked about Swiss, Euro Swiss. I mentioned that this you have to take notes properly. There was a supply here. I talked about this supply last week, and now we have another supply, which if there's a pullback, I'll look to shorts on the Euro Swiss. Why am I looking at the Swiss? The Swiss is the untainted 7. Yes, the yen is a 7, the dollar is a 7, but remember the dollar has a little issue behind the DOJ and the labor data. But if you look at the Swiss, it has no issues at all. So that is why I'm more focused on the Swiss, and the Swiss dollar is actually one of the best setups if we look at it this way. So this looks like a demand, right? I know a lot of people will be buying there. I talked about this supply zone, and the market mitigated this supply zone just a tap. But I won't be looking to, except it breaks this point, then I'll look for, just because I want to follow my technical analysis true and true. And I spoke about euro weakness, yes, but now the pound is actually not weak because of it's a little bit stronger in terms of the energy crisis. The energy crisis is affecting more of the euro than the pound. Although the pound is in euro, yes, in Europe, but it's actually, let's say, the best in the euro, so it's not going to be that affected. And for that reason, I look at the pound NZD. Why? Because NZD is weak. If you look at this on a weekly time frame, what we see here is price is reacting from a demand. We see a bullish weekly candle, and if we go to our daily time frame, um, we've got internal 4 hours breakout structure. We've got second one. So if there's a pullback here, we should see price pushing higher as the first target, and then the second target is quite a distance away. So that's what we'll be looking out for. And remember that we might see Brent at WTI at 100 and something. So the yen is actually very weak due to this. That's just what I've got. And remember, on Wednesday, we'll be looking at the CPI data from the dollar. And if there's a miss, then the Fed must cut rates to save the jobs market, right? Even without a confirmed chill, this will trigger a final USD waterfall. Trade the reality of 2026. That's all I can tell you, right? Hit the subscribe button, like, subscribe, share this video.